The US housing market right now, it feels like it's sending some seriously mixed signals, doesn't it? One minute you hear some good news, but the next you see headlines about a historic slump. So let's cut through all that noise and figure out what is really going on. Okay, let's just get right to it. Here's the big question on everyone's mind. Is the housing market finally turning a corner? Are we actually seeing the beginning of a real spring thaw, or is this just, a sunny day in the middle of a long, cold winter? And this right here, this is why everyone is so confused. You look at February 2026 and you see sales went up by 1.7%. Okay, not bad, right? That sounds like progress. But then you zoom out and you realize that 2025 as a whole was the absolute worst year for sales in 14 years. It's this exact contrast that has us calling this a fragile thaw. To really get what this fragile thaw means, we have to get our hands dirty and look at the actual numbers. So let's start decoding the data that's driving all these headlines. So about that 1.7% bump in sales we saw in February, well, there's a little bit of a catch. Turns out it happened right after a huge drop in January. And why the drop? Mostly because of all those winter storms that basically brought the country to a standstill. So it's really less of a genuine surge and more of a bounce back from being frozen solid. Now, what about prices? The median home sold for just a hair under $400,000. But here's what's really interesting. That's only up by 0.3% from the year before. Just 0.3%. It means that while prices are obviously still high, that insane rocket ship growth we've been seeing for years seems to be hitting the brakes. And if you look at things month to month, February looked pretty good across most of the country. Sales were up in the South, the Midwest, and the West. But, and this is a big but, when you zoom out and look at the year-over-year picture, it's totally different. Only the South actually saw an increase in sales compared to the year before. It's a perfect illustration of how delicate this whole situation is. Okay, all of these numbers, the sales, the prices, the regional differences, they're all pointing to one giant blinking sign. And that's the real story here, the affordability squeeze. Now, to really wrap our heads around affordability, we need to quickly look at something called the Housing Affordability Index. It sounds kind of technical, but the idea is super simple. The higher the number on the index, the easier it is for a typical family to buy a home. The lower the number, the tougher it is. Simple as that. And this shows you the wild ride that index has been on. After hitting a high point back in March 2022, affordability just fell off a cliff. By February 2025, it bottomed out at 103.1. But look, by February of this year, it climbed back up to 117.6. And this is so important. Things are still really, really tough for buyers, but this is actually the most affordable the market has been in years. So why the change? What's helping things, even a little bit? Well, it's a mix of a few things. First, people's wages are finally starting to grow a little faster than home prices. That's huge. Second, mortgage rates, while still no joke, are a bit lower than they were at their peak. And finally, there are just a few more homes on the market, which takes some of the heat off those crazy bidding wars. All right, so we've got the numbers, we've got the affordability picture, but what does it all mean for the future? Let's bring in some experts to help us read the tea leaves. First up is Lawrence Yun, who's the chief economist over at the National Association of Realtors. He sees that affordability is getting better and says, yeah, buyers are noticing. But he's quick to caution that we are a long, long way from normal. And get this, he points out that even with 6 million more jobs in the economy since 2019, we're actually selling 1 million fewer homes. That disconnect is just massive. Next, Heather Long from Navy Federal Credit Union points to something really interesting. It's all about psychology. She says there's a magic number, 6%. If mortgage rates dip below that, she thinks Americans will just start buying. It's like our whole collective mindset about what counts as a good rate has totally shifted. And that mental shift could be enough to open the floodgates. And she adds another crucial detail. She's seeing a really strong demand for loans that don't need that traditional 20% down payment. It just goes to show you how creative and determined people are to find any path to homeownership they can, even when the odds are stacked against them. And finally, to really put this all in perspective, listen to what Joel Berner at Realtor.com has to say. He points out that the total number of homes sold over the last 3 years is basically the same as it was in the years right after the 2008 financial meltdown. That really tells you how much of a punch these high interest rates have packed. So, when you put it all together, what do you get? Well, the market is showing these little green shoots of life. There's definitely something happening, but it is so sensitive. You feel like if mortgage rates drop just a little, buyers will come rushing back. But if they tick up again, poof, everyone could get spooked and disappear. Which, of course, brings us right back to where we started. Is this the real deal? A true spring thaw for housing? Or is it just a fleeting moment of sunshine before another cold snap? Honestly, it feels like it could still go either way. Everything depends on this really delicate dance between interest rates, home prices, and, well, how confident we all feel about the future.